We've been waiting for this for 2 months, since October 11th. I have that memory very clear in my mind.
We all remember.
We all
yes.
do. We all do. So we've been waiting for this for a while. There was some sort of already consensus that the December 15 tariffs would indeed get pushed back. I think what got the market a little bit excited here in the middle of the day was the possibility for some upside surprise, the removal of existing tariffs. So let's see. We'll have to wait and see, but that would to us be a significant upside surprise.
Stephanie, have you been surprised at how well we've really dealt with the tariffs that have been in place? I mean, for the most part, many companies have found mitigation strategies to work their way through it.
Well, the consumer-related companies have held in quite well, right? Because the consumer is quite strong, and that's 70% of U.S. GDP, as you know. But manufacturing, they've had a hard time of it the last year. However, that said, last year and the beginning of this year was their time to take pain, to restructure, to increase pricing. And so now, heading into 2020, you have easier comparisons, you have price increases to offset the tariffs, and maybe, just maybe, we're onto something with this ISM PMI stabilization. So that's why I think those sectors are doing even better than consumer discretionary into this rally, because they've been hit so hard, and they are pretty cheap, especially if you normalize earnings.
Is the stabilization in ISM, global ISM and PMIs, for real? And is that, how much do you attribute the overall rally recently to that?
We attribute part of the rally to that. It's not just about the trade deal expectation. It's also about the initial signs of stabilization in that hard-hit manufacturing sector globally. And especially certain parts of the PMI surveys have been pointing to stabilization in global growth in the first quarter of next year. If you look at new orders rising, if you look at inventories already much more stabilized. So I do think it's for real. It's just really important for the data to confirm that. So we'll be looking at the December flash PMIs next week. That could push the market higher.
And look at the German business confidence numbers are starting to also improve. But you're right. We need China to stabilize, for Europe to stabilize, and for Germany to kind of continue its upward momentum.
Exactly. And even stability, I think after 2 years of deceleration, if stability is all we get in 2020, that's a win. Yeah. That's a victory.
I agree.
So we're getting more optimistic about global stocks as well.
It seems that the recession worries are just pushed so far away from where we had been, I don't know, earlier this year. But global growth and domestic growth has slowed. Are we just more in a downshift than a recession worry period?
I do think the data has confirmed that it's more of a downshift than a stall, whether it's the U.S., whether it's Europe, whether it's China. But by no means do I think that we won't see recession fears pop up again in 2020 or 2021. We are still late cycle, trade deal or no trade deal. Right. So for us, it's about, having exposure to risk, to growth sectors, but maintaining that insurance just in case, because we are later cycle.